Well, g'day there everybody. Thanks a lot for joining me as at this Monday afternoon market recap. We do have about 15 minutes left in today's session. However, it's great that you are listening to this recording because today has been that of a significant milestone. Today, on the S&P 500, we have closed that opening gap, which takes us all the way back to one of the final trading sessions in the month of January 2018. Once we printed this reversal gap and we began to stabilize at the support area at 2,600, our market outlook, or at least our narrative, our interpretation of the market signals when it comes to risk and reward and the direction of the market, it has been to the upside. Now, as I say this period, all right, of this grind higher, it has been a little bit longer than what we have originally expected, or at least forecasted. It has been about 6 months, a little bit over 6 months since we've based at 2,600 to ultimately today being Monday's session where we've come on up intra-session and tagged 2,852. I'm very happy right now to say that this trade, or a multiple series of trades, has now run its course. Most recently, last week, we actually closed out a bunch of positions on the SPYs at 2,815. We got very close to actually hitting it on Wednesday. We also pushed up again intra-session on Thursday, which established this little shooting star candlestick prior to this little sell-off. And we said to ourselves, well, since this bullish trade at 2,767, or the most recent bullish trade, you can see all of these past green retrospective entries that we've had in the past off from multiple areas of support, again taking advantage of this bullish intermediate move. I can now sit here as at the close on Monday, or very close to the close on Monday, and just say, look, congratulations on a series of profitable trades on the SPY long, all right, long orientated or calls. If you were trading those calls, they've been rather profitable, which is good, but now our directional sort of outlook, it needs to move more so into a neutral sort of perspective. It doesn't matter right now whether or not the S&P tries to move in uniformity with the NASDAQ and break out above its respective all-time highs. And you know what? It really wouldn't bother us either if we actually get a reversal from this ultimate target, again, 2,852, and we begin to crack, all right, this intermediate bullish upward trend. Either of those two outcomes, or at least what I should say is that one of those two outcomes is going to happen. And as technical traders right now, for us, it doesn't really matter which of those two options actually occurs. All right, we're just going to trade the impending directional movements. However, what is most likely going to happen is that volatility around this critical resistance area on the S&P 500 is going to linger. Okay, it would be very rare to see this market break out, say come Tuesday or Wednesday. It would be also rather more so rare to see it break down on Tuesday or Wednesday. What's most likely going to happen is that we are going to sort of get stuck moving sideways. And the reason I say this, and really this is the most important aspect of this video, as at Monday, is that, look, when it comes to market arbitrage opportunities, pardon me, in my opinion, there is a pretty outstanding opportunity on the diamonds right now. And again, this links back into the Dow Jones Industrial Average. And the reason I say this is because if you think about all three of these markets, or at least the closely followed US market indices, you're going to come to the conclusion that you've got the NASDAQ at or very close to its respective all-time high, the all-time high that we priced in really only 2 weeks ago. When I flash back to the S&P 500, you can see that we're within sort of a stone's throw of the all-time high. This is taking us back to January again, 2018. And when you look at the Dow Jones Industrial Average and you take into consideration just where that swing high and also all-time high was back in the month of January 2018, you can see that there is quite a difference. Okay, there's such a gap, or a big gap, not so much a true body gap, i.e. the gap that we've established on the S&P that we've just filled, and back here in the same period for the Dow Jones Industrial Average, but really the gap is, well, where we're currently trading to where that similar, or at least respectable sort of or relevant area is, okay, compared to that of the S&P and the NASDAQ. So we're still looking at the Dow Jones moving up to 26,435 in the past when it comes to directional plays through ETFs, okay, the SPYs, the diamonds or the Qs. The diamonds recently, there hasn't been all that much sort of liquidity. So the one caveat to this at the moment is that, look, if you want to trade the diamond positions, or if you want to hold a diamond position, or a bullish position, a call contract, or multiple call contracts, I would encourage you to look for adequate open interest and liquidity. You need to have at least 500, all right, when it comes to that individual strike price, depending on the strike that you're looking for. But the general trade setup on the diamonds right now is going to be a trade, an executable trade, okay? Do this in not in real funds if you're not well versed in trading. If you're learning about trading, or if you're interested in learning how to trade the markets, you should do this in a virtual account. Don't risk your own capital doing so. But what I'm looking at myself, and this will be with real funds, is taking advantage of a little bit of arbitrage opportunity, because you've got the S&P 500 and the NASDAQ back up relevantly here at 26,435. So you're looking at the trade setup moving about 800 points from where we're currently positioned at on the diamonds, right, or on the Dow Jones Industrial Average. 25,000, we'll just round it up to 500, all the way up to 26,435. It's a little bit over 900 points. You can see on my chart right here, the breakout entry is about 25,645. Again, this is all subjective really, and it's up to you to make an autonomous decision as to what you want to look for. But this is looking like a very high probability trade outlook, or at least for the Dow Jones Industrial Average to catch on back up to the S&P and the NASDAQ. And essentially what we're doing is we're just rounding out or rolling out of those S&P positions if you're still holding them, and just moving capital, right, or at least directing the flow of capital into a new position on the diamonds, which we're looking for to continue to break out and move to the upside. Now, I know the markets are relatively stretched. They are relatively overbought, but this does take the formation of a general sort of bull flag pattern. If I bring up, of course, these exponential moving averages as well, you can see that we're starting to get some form of a trampoline, a price support, and a push off from the rising 10 and also the rising 20. And it looks as though, if you take into consideration this swing high over here, it looks as though we are getting some form of a back test which is held, and that is working with this hammer candlestick. This is taking us back to Thursday last week, and we're starting to see the early instances of a push off from that support area. So that's what I'm gravitating towards at the moment. But again, taking us back into the beginning of this video, I just wanted to say a big congratulations to everyone who has taken part in this bullish grind higher. It has been rather frustrating at times. But to those who've been patient and disciplined and have just allowed time to really run its course, even though it has been longer than what ideally we would have liked, here we are. We've moved from 2,600. We're all the way back up at 2,850. And now is a very critical time for the markets. If we don't see a collective push above the swing high, when we're going to be sort of talking about divergences taking place on the markets, and we'll sort of dig deeper down that sort of rabbit hole. Otherwise, we're going to see weakness below this rising intermediate trend line, which opens up the door for this to be some form of a consolidating channel. And it could be some form of, if I can just color coordinate this, something like that. I mean, that's a pretty horrible sort of little illustration I've drawn, but really what I'm trying to highlight is resistance at the top and support at the bottom. Time will tell which it is going to be, but at the moment I would encourage you, one, to not really look to take positions on the S&P, not to really chase after positions on the NASDAQ unless we break above, close above, and continue above this swing high here. I think the real opportunity right now is on the Dow Jones Industrial Average, taking advantage of that move that needs to be made to take these markets back up into synchronicity with one another once again. So that's going to do us as at this Monday. I'm not going to go through many of the individual stocks. It's more so just a market recap and a congratulatory video based on what our analysis has been on the S&P 500, and finally this coming full circle and proving us correct. And I just wanted to thank all of you and congratulate all of you as well. All right, so until next time, everybody, I'm going to say farewell. Enjoy your Monday evening. I'll be back with you most likely tomorrow for another market recap. If you have any questions whatsoever, email me success@pivotpoint-trading.com. It's James signing off on behalf of Pivot Point Trading. Farewell.